All right, let's get your business news now with Devin Morgan. Devin, hello. Thank you for joining us in studio. So, another bank with results, not looking bad at all, but really concerned about the impact of our electricity crisis.
Yeah, and you can understand why. We've had a number of interviews with banks and these big financial institutions, and the same flag comes up that if we don't get the power cuts sorted out, you will see an economic decline that no one needs. Not that we're not subdued already, Sally. So ABSA reporting its highest ever profits, despite some challenges locally and at its operations in Ghana. Headline earnings were up 14%, with the bank distributing 9.3 billion rand in dividends to shareholders. Arrie Rautenbach is the ABSA Group CEO. He joins us now. Arrie, thanks very much indeed for your time. So last year we saw that wave of interest rate hikes. You had higher loan repayments as a result of that. Presumably that fed into your results quite somewhat.
Devin, yeah, thank you. Thank you very much for the opportunity to talk to you and your audience again. Of course, we have seen, the global macro situation worsen in the last year. We've obviously seen interest rates move globally, and we've seen the same across our markets. We've also seen consumer sort of distress, cost of living at a quite high level, and of course inflation. So that all flows through, and how consumers handle the current situation. When you see rates move as much as what they have in the last year, it's difficult for consumers and businesses to adjust quickly. So what we are seeing is the consumers are beginning to adjust to these levels of interest rates. If you look at our actual terminal rate and where it finds itself today, it's not a rate that we unused to in this in the South African market, but it's just a tempo that the rates have moved that I think takes time for consumers and businesses to adjust to that that level of rate hike.
Yeah, I mean that was my next question. So higher interest rates, higher loan repayments for you, good on the one hand, but I mean, what does it do to your client? I mean, especially in the long term, if you look at those businesses and consumers trying to survive in the midst of the worst wave of power cuts we've seen.
Look, Devin, I think what we're seeing is significant resilience, across our customer base, and we still see that resilience in the South African economy. But obviously, we are a diverse franchise. We obviously operate across a number of South African markets. So whilst we get the benefit of the rate hikes on the one side, there's always what does it mean on the consumer distress side on the other side. So I think what we are seeing is we're seeing impairments beginning to tick up, but it's still well within our risk appetite and the sort of position that we've flagged. So I think if you look at the quality of our balance sheet, if you look at the resilience of our balance sheet, and if you look at the capital levels, if you look at liquidity levels, and very importantly, if you look at the coverage ratios, the balance sheet is still very resilient. So of course, I think we'll watch the situation very closely. But currently, I think we're well positioned to handle any distress. Still important for us is that notwithstanding the fact that there are some macro headwinds, our businesses are set up to focus on quality growth and continue to look for quality growth across all our businesses.
Arrie, you've raised particular concern today with what's happening with smaller businesses trying to cope with power cuts. What's your results saying about that particular segment?
Devin, I think we talk about the power cuts, and of course it impacts all South Africans across all segments, consumers as well as businesses, small as well as large. What we are seeing though is a lot of businesses focusing on building resilience, to be able to deal with this and to reduce the reliance. So we talk about the demand side of the power situation, and what we're seeing is all our businesses are keen to invest in that, in that part of their businesses to build that resilience. And our expectation is that we will work very closely with them to continue to do that.
Yeah. Are you planning for stage 8 load shedding?
Devin, I think we got to be very aware of the current levels of load shedding and whether that can get worse. As a systemic bank, of course, we build scenarios that look at situations that can worsen itself, and stage 8 is certainly something that is top of mind for us. But again, I think what we're seeing is some real action taking place. We've seen the state of disaster announcement. We've seen the announcement of the Minister of Electricity. And I think what we're seeing is we're seeing business very keen to work with these structures and to collaboratively work across all these structures to ensure that we take action, we find solutions that are sustainable, not just on the supply side, but as I've indicated now, working with our customers also on their resilience, specifically on the demand side of consumption.
So we've had this Silicon Valley Bank in the US collapse, and we've seen that ripple effect on banking shares, including yours. How are you making sense of this development in the US?
Devin, I think this is still a developing sort of environment. We've only started seeing these announcements of SVB and Signature Bank come out at the end of last week. If you look at these banks, they're clearly sort of small to mid-tier banks. And you're seeing some very strong action coming out of the US to deal with the uncertainty as a consequence of that. Devin, I think if you take a step back and you just look at the resilience of the South African banking structure. So firstly, if you look at the ABSA results that we just put out today, again, some very strong balance sheet resilience, very strong capital levels, well above our board target ranges, very strong liquidity and deposit franchises, and very strong coverage. You've seen that across the banking sector in the South African environment. And of course, we know that our regulatory environment is world-class. The quality of our central bank, the quality of our prudential authority, and the involvement in our banking sector is something which I think will stand us in good stead. So I think as we look at this early days, got to make sense of it. We are seeing some discomfort or some uncertainty in the market, but certainly from where we are sitting, I think the South African banking sector is resilient, and we'll see how this situation develop over time.
Arrie, as I let you go, just a quick one. You mentioned it in your answer here and there and touched on it, but are people paying back their loans?
Of course, so as we've indicated earlier, we are in a high inflationary environment. We are seeing cost of living at a high level. But again, there's resilience across all the sectors. We have guided that we expect the loss rates to remain at the upper end of our range, but that's still within our appetite. So I think again, if we look at how we positioned, how our balance sheet is positioned, I think we're well positioned to deal with any sort of levels of macro challenges. We're working very closely with our customers, and we'll continue to work very closely with our customers, in the cycle. And again, also what's important is that doesn't mean that there's not opportunities for growth. So with our commercial business set up the way they do, the way they are, we will continue to look for smart growth opportunities in the current cycle.
All right, we'll leave it there. Arrie Rautenbach, the CEO of ABSA. Thanks very much indeed for talking to us. All right, quick.